This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Triple-digit loss again. The Dow Industrial having its worst start to a year since 2008 as stocks suffer another steep decline. But is it the bond market that investors should really be paying close attention to?
Back to work. The new Congress is sworn in, and Wall Street has a list of issues it wants lawmakers to act on.
Open for business. Why now may be a good time to become your own boss? All that and more tonight on Nightly Business Report for Tuesday, January 6th.
Good evening, everyone. I'm Sue Herrera. Volatility was the word of the day on Wall Street once again as the price of oil plunged even further. Bond yields tumbled as investors rushed to put money into safer investments, and stocks managed to start the session higher, then pair some steep losses that had the Dow on track for the worst start to a new year since 2008. So here's how things looked at the closing bell. It wasn't all that pretty today again. The Dow fell 130 points after being down more than 200. The Nasdaq now on a 5-day losing streak, down another 60 points today. The S&P fell 18 points, barely holding above the 2,000 mark. In the bond market, the yield on the benchmark 10-year note fell to 1.88% before recovering a bit to close at 1.9%. Oil prices fell again to the lowest levels since April of 2009. U.S. crude was down more than $2 today, closing at $47.93 a barrel. And Brent was also down $2, closing at $51.10 a barrel. The recent drop in oil prices is a big reason behind the tumble in the Dow Transport Index, which is down 5% since the start of the year after a strong 2014. Morgan Brennan has more now on what's dragging the transports lower and whether this is the start of a bigger turn.
2015's been a rough ride for transports. It's a sharp contrast to 2014 when the index gained 23% or double the S&P. Experts say there are two reasons for the change. The first, investors selling stock winners to defer capital gains taxes until next year. And the second, oil's ongoing slide. What slowing production could mean for the companies most exposed to the energy sector.
Our overarching view is that economic growth will continue to drive volumes in 2015, so we will see a bit of a stabilization and ultimately good performance for the transports in general. It's probably going to be a little bit more consumer-facing end markets that drive the story in 15 as opposed to industrial end markets, which drove it in 14.
Fuel is one of the biggest costs for these companies. As the price of oil has plunged, transport stocks have soared because better energy prices can mean better profits. Cheaper oil also enables consumers to spend more money on items other than gasoline. That could benefit parcel carriers like FedEx and trucking companies like Swift Transportation. But lower oil also means a slowing production, and that's a headwind for railroads moving crude and fracking supplies. And with natural gas so cheap, operators carting coal could also come under pressure, names like CSX and Norfolk Southern. Still, experts expect the entire transport group to, eventually, post another solid year.
Overall, we think transportation is tight from a capacity perspective, and you're going to get pricing increases. That's going to be borne to some extent by the shipper or the consumer in some cases, but I do think that pricing is going to go up and can help drive earnings power in 2015.
And it will all come down to earnings, and those kick off next week when CSX reports on Tuesday. For Nightly Business Report, I'm Morgan Brennan.
Well, you may know him as the king of the bond market, but today Bill Gross is more like the king of pain, or maybe Debbie Downer, the closely watched bond investor who bolted from PIMCO last year to join Janus Capital, warning investors today in a monthly outlook that the good times are over and, quote, be cautious and content with low positive returns in 2015. The time, he says, for risk has passed.
Chris Wolf joins us now with his analysis of what's happening in the financial markets. He is Chief Investment Officer of Merrill Lynch Private Banking and Investment Group. Chris, great to have you with us. Thanks so much for joining us tonight.
Thank you.
I guess we should start with Mr. Gross's comments. Are the good times over at this point? And what do you think he was worried about?
Well, I'll start with a little bit of history lesson. I seem to recall that some time ago, Mr. Gross wrote a piece called Dow 5000. So I think those making predictions might have to suffer the consequences of time. But in all seriousness, I think what he's trying to get at is we've had several years of very good market returns, both in stocks and bonds. And anyone setting up their expectations for the last 5 years when stock markets returned 21% is misplaced. They are misguided. It's much more likely that returns are a lot lower. And importantly, you may have to be more selective and more thematic or adjust your approach in a market that now has relatively higher valuations and I think a lot of good news built into it. But I think the idea that all markets are bad, good times are over, that blanket statement, we just don't agree with it.
All right, let's move on to what the bond market seems to be saying these recent days. 10-year yields down below 2% today. The Japanese government bond, very low yield, historically low there. What are bonds saying?
Well, I think they're saying a couple of things. I mean, to Mr. Gross's point, the idea that there may be lower growth in the near term over the next, say, couple of quarters or through the rest of 2015 is an important indicator from the bond market. I think the second thing they're saying is they benefit when there are global worries or uncertainties. There was a flight to safety today, for example. That's why the bond market did so well. There are worries about Europe, say, for example, around Greece. Elections are upcoming, and whether or not they stay in the euro has been in the markets for some time. There are worries about the consequences of low oil prices. It's not just good for some of the transportation companies, but it may not be so good for some of the countries like Venezuela, Iran, Algeria, Nigeria. There are consequences to low oil prices for a long period of time. So I think those two things, and then the third piece, which is, well, what happens when you have low oil prices, lower growth than expected? Companies start to revise down their estimates for growth, and that means lower projections and ultimately lower earnings growth. So I think that combination of things has been affecting the stock market, and if you think there's a flight to safety, you go buy bonds, which is what I think happened today.
Overall, though, are you still bullish on the U.S. stock market? How much more do you think this bull market has in it? And do you like other areas around the world perhaps a little bit better than the U.S.?
Well, right now, I think we would favor U.S. assets because I think we have an environment where we still have very good profit margins, very good cash flows in the United States relative to other parts of the world. And we're exiting stimulus. So the idea that the central bank is offering less help really signals that companies can stand a little bit more on their own. Now, the tough part of it is everybody knows this already, so you have to be selective in U.S. markets. And our view is that the bull market has a little bit more to run, but not at the same pace. As I indicated, probably more around single-digit returns than double-digit. That said, if you have a longer-term viewpoint, say 3 or 5 years, a lot of the value is outside the United States. Europe, for example, despite all its troubles, 20, 30, in some cases 50% discounts to markets, say, in the United States. Japan, not so much discounts, but same story. You have value outside the U.S. So I think the story is about time horizon. If you're really thinking about the next 1 year or so, the U.S. still looks pretty good. The dividends, the cash flow story is very compelling in our view. If you have a longer viewpoint, the value is outside the U.S.
All right, Chris, thank you so much. Chris Wolf with Bank of America Merrill Lynch. Ty?
All right, Sue, down to Washington now, where lawmakers are back from their holiday break, and the new 114th Congress was sworn in today. Republicans assume full control for the first time in 8 years, with comfortable majorities now in both houses. John Boehner was reelected to a third term as Speaker of the House after a tense vote and opposition from within his party, notably from the Tea Party. He ultimately received 216 votes. So what does Wall Street want from this new Congress? Kayla Tausche takes a look.
There are a lot of changes ahead in Washington with the 114th Congress being sworn in. Wall Street is bracing for many of those changes to have a near-term impact, and here's what it's watching. First, the renewal of the Terrorism Risk Insurance Act died in Senate last month due to a seemingly Wall Street-friendly rider that exempted parts of Dodd-Frank. Now, Republicans say that this legislation is still a must-do, though it will likely make it through with something Wall Street pushes for that the White House doesn't like. Now, that doesn't mean rolling back Dodd-Frank altogether. Banks know it's the law of the land, but certain parts could see changes, like the Consumer Financial Protection Bureau could see a push for a new governing structure that emulates other regulatory bodies. Finally, the Senate is expected to take up a bipartisan bill allowing banks to declare Chapter 11 bankruptcy. That's a move that seemingly makes taxpayer bailouts less and less likely as we get away from the financial crisis. Now, outside of legislation, there are some high-profile people moves that could have an impact on the banking sector. First, the controversial appointment of Lazard banker Antonio Weiss to Treasury Undersecretary. That's an appointment that garnered a surprising and some say unfair amount of criticism. There's also the nomination of Loretta Lynch of New York's Eastern District to helm the Justice Department. And remember, the DOJ is still actively pursuing several investigations into Wall Street activities. Finally, we will see 2 new nominees to the Federal Reserve. One we know is the former CEO of the Bank of Hawaii and has community banking experience. The other nominee we are still waiting on, but could have a large impact on the markets. So a lot of the same debates from years past and from Congress's past, but many new voices, including a new chair at the Senate Banking Committee that could potentially change some of these outcomes. For Nightly Business Report, I'm Kayla Tausche.
Another matter on the minds of lawmakers today, legislation to resume construction on the controversial Keystone XL pipeline that would bring crude from the oil sands of Canada all the way to refineries along the Gulf Coast. Republican Senator John Hoeven of North Dakota, who introduced a bill to approve that pipeline today, has been critical of President Obama's inaction on the project.
This project's been delayed for more than 6 years by the president, so really his strategy is defeat through endless delays. But this is a pipeline that will move energy more safely, more cost effectively. It'll take congestion off the rail.
But White House spokesman Josh Earnest was very clear about what the president intends to do about that bill.
This piece of legislation is not altogether different than legislation that was introduced in the last Congress. And you'll recall that we put out a statement of administration position indicating that the president would have vetoed had that bill passed the previous Congress. And I can confirm for you that if this bill passes this Congress, the president wouldn't sign it either.
Construction of the pipeline is being held up by environmental concerns and a lawsuit in Nebraska about which state agency oversees decisions about that project.
Well, with the White House already throwing down the gauntlet regarding the Keystone pipeline, it is looking now to be a contentious start to the new year in the nation's capital. Anyone surprised? John Harwood, I'm sure, is not. He joins us now from Washington. John, welcome. You know, Keystone has fairly broad support, some of it from within the president's own party. Why would he veto it? Would it be a tactical veto or really a veto on principle?
It would be a tactical veto, Tyler. The president's point would be, don't rush the process. Obviously it's been delayed over a long period of time. You still have a court decision awaiting from Nebraska on routing. You still have a recommendation coming from John Kerry, the Secretary of State. The president has not indicated that he is against the pipeline, but he doesn't care that much about it one way or the other. And since Republicans want it so badly, he's trying to put it off and invite them to bargain with him on things that they might do for him on energy that would allow him to go ahead with the Keystone pipeline.
Do the record lows that we're seeing in oil prices help the administration in their case, John? It would seem to me that it might.
No question about it, Sue. In fact, there's some question as to whether the pipeline would even be finished under current circumstances because of how low those prices have gone and how relatively expensive that makes the tar sands oil. I do think there is enough momentum behind the project that it's not going to simply die, but I do think that strengthens the president's hand.
Talk to us a little bit about today's speakership vote in which Mr. Boehner had many more defections even than the last time.
He could afford to lose 28 Republicans and still get a majority of the House. He lost 25. Now, the entire House didn't show up, so there might have been a few more votes for him had everybody come to vote. There were only just over 400 votes out of 435 members. But this was an indication that there is deep dissatisfaction with some portions of the right. Nevertheless, I think the outcome was pretty much always accepted by members within the House that this was a protest and not something likely to shake John Boehner out of his job. And the fact that John Boehner has more votes to lose in a fight like this because his majority is up to 246 members means he may have some more flexibility in staring down the Tea Party on tough compromises with Democrats.
It's going to be an interesting couple of years in Washington, John. We're glad you're going to be there watching it for us. John Harwood tonight from Capitol Hill. Still ahead, want to be your own boss? Why the time may be right to start or expand a small business. Google is one of the biggest and most valuable companies in the world, but it's disappointed a lot of investors over the past year. Today, shares of the search giant fell nearly 2.5% after falling 9% in 2014. So why is such a successful company not feeling the love of investors? Josh Lipton takes a look.
For Google bulls, 2015 could not come soon enough. Last year wasn't pretty for fans of the search giant. The stock underperformed all the major U.S. averages. A big concern for investors? That advertising dollars were moving away from Google and towards social networks such as Facebook. That worry became more heightened when the company last reported earnings in October. Paid clicks, a key measure of how often users click on a search ad, increased just 17%. That missed Wall Street's expectations and represented a sharp slowdown from the prior quarter. But Google analysts say concern among investors is misplaced. They argue that Google is just growing off a much larger base than Facebook, which explains the difference in growth rates between the two internet rivals.
We don't see any clear evidence so far that Facebook's stealing away ad dollars from Google. We think they're both taking dollars from a larger ad pie that's still coming from offline, and now with a major new bucket that's coming online, which we think is TV ad dollars.
Beyond its ad business, another real concern among investors is the amount of money Google is spending to move into new markets. Analysts at Janney think Google's spending on capital expenditures could jump 50% to $11 billion in its current fiscal year. The question is whether that spending spree on everything from wearables to connected cars will ultimately pay off for the tech titan.
I mean, those are all very large opportunities. Whether they get them all four of those right, probably not. But if they get two or three of those, I mean, that can help sustain these growth rates for much longer than the market realizes.
Finally, 1 year doesn't necessarily make a trend. While Google did suffer a tough 2014, the stock has been a long-term winner. Since its IPO in August 2004, Google is up more than 1,000%. For Nightly Business Report, I'm Josh Lipton in Silicon Valley.
Takeover buzz sent shares of AOL and Verizon higher today, and that's where we begin tonight's market focus. According to Bloomberg, Verizon is exploring a potential acquisition or joint venture with AOL to help expand its online video offerings. Verizon squashed the rumor, saying that it is not planning any major acquisitions. Still, the two companies closed higher. AOL up more than 3%, Verizon rose 1%. A done deal for Coach and Stuart Weitzman. The handbag maker is buying the privately held shoe company for more than $500 million. The move is an effort by Coach to expand its high-end offerings and compete with fast-growing rivals like Michael Kors. Wall Street didn't cheer the news, though. Shares of Coach fell 1% to $36.30. Walgreens is reaping the benefits of a bad flu season. The drugstore operator reported a better-than-expected jump in same-store sales in December, thanks to higher sales of flu meds and flu shots. Prescription sales also rose. Shares were a fraction higher to $74.69.
U.S. Steel is the latest company pointing to low oil prices for some bad news. It will idle plants in Ohio and Texas and lay off more than 700 workers. The company is one of the first big U.S. industrial casualties of the recent collapse in global oil prices. Its plants make steel pipes used for oil and gas exploration. Shares of the company down 3% today to $24.58. 2014, good year for Boeing. The company announced record annual commercial jet deliveries. The news comes as the aerospace company gears up for another increase in production. Still, shares were off on this down day by 1% to $127.53. Rosy outlook sent shares of JCPenney way up after the bell. The retailer said comparable store sales and fourth quarter sales going to come in at the upper end of estimates. The stock spiked after the bell. Before it, the shares were up about 2% to $6.56.
You know, a lot of would-be entrepreneurs are finding that 2015 is a great time to start a new small business. So what are the trends boosting entrepreneurs right now? Well, Kate Rogers has the story.
For Nigel Thomas, 2015 is the year to expand. The former software engineer started his company GoLocker in November, allowing consumers to have packages delivered to lockers in 2 Brooklyn convenience stores rather than waiting out deliveries at their homes or apartments.
We're looking to get into Manhattan, Queens, and the other outer boroughs. And as more people start shopping online and take advantage of the free deliveries that most internet companies are offering, they need a place to have their package delivered to.
Thomas is renting space right now, but hopes to get a permanent location this year and cash in on energy tax incentives.
Once we get our location of our own, we'll be installing some solar panels on the roof so that we could take advantage of that.
Analysts say Thomas might be onto something, as several trends are in Main Street's favor in the new year. Low fuel costs are a positive for entrepreneurs so far in 2015. Crude oil hit a 5.5-year low today, and energy costs are a top 3 concern for small businesses, according to the National Federation of Independent Business. Analysts say this can have a positive top-down effect for new companies. Easy access to capital is another plus. Business owners can choose between alternative financing options from lenders like OnDeck and Lending Club, and traditional loans like those from the Small Business Administration, which is offering 0 fees on loans less than $150,000 in 2015. The outlook among small business appears sunnier in the new year. The NFIB's Optimism Index hit a 7-year high in December. And while the unemployment rate held steady last month at 5.8%, meaning that fewer people have to become entrepreneurs out of necessity, more might choose to take advantage of a recovering economy like Thomas.
I am very optimistic about 2015.
For Nightly Business Report, I'm Kate Rogers.
And to read more about why now may be a good time to start or expand your small business, head to our website, nbr.com. Still ahead, from your home to your car, why technology companies at the Consumer Electronics Show are making a big push to connect just about everything you own to the internet.
The latest smartphones, wearable devices, ultra-high-definition TVs, and other gadgets all on display at the Consumer Electronics Show out in Las Vegas. Opened its doors today. Julia Borston was there and shows us what must-have items tech companies are putting out this year.
The Las Vegas Convention Center is full of the latest televisions. They're getting bigger and thinner, along with sleeker and more affordable smartphones.
Take back TV.
Dish unveiling a new way to watch live TV on these devices. Sling TV, a $20 monthly subscription to stream 11 cable channels, including ESPN and CNN, raising questions about whether it'll inspire consumers to cut the cord. And big names are here to showcase the latest gadgets. Ryan Seacrest promoting the new Typo, keyboards for iPhones and iPads, which he developed to meet his own needs.
Which is sleek and it's smooth and it literally is my office. This is how I work every single day. Everything that I reply to is coming from one of our keyboards.
This year more than ever, CES is about connecting everyday household tools and devices to the internet to make them smart. Everything from this GE smart living room security camera and fan to this LG smart kitchen and this Qualcomm smart light bulb, which consumers can control from an app on any device.
You're really seeing a lot of intelligence in the home and in homes that aren't necessarily brand new. These are places that have been around and you can install kind of a layer on top of your existing home, so you don't have to buy all new products and start from scratch.
Connected cars and autonomous vehicles are also big at CES, with Audi, Mercedes, and Ford all showcasing the latest technology. All these innovations aim to help consumers stay connected wherever they are, whatever they're doing. For Nightly Business Report, I'm Julia Borston in Las Vegas.
Also at the Consumer Electronics Show, Mercedes-Benz unveiled its new concept car, the F015, an all-electric autonomous drive vehicle featuring inside door panels with web-connected touchscreens. And the head of Mercedes-Benz Cars says the future of driving is near.
This is a prototype which works, so none of this is fake. It's working, and this will be reality in the showroom next decade.
So Phil LeBeau took this high-tech car out for a ride.
Mercedes calls it luxury in motion, the F015, unlike any car you've ever seen.
Mercedes believes in the future, your car is not simply a place to go from point A to point B, but a chance for you to turn around and talk with others in the car in a way we haven't done in the past. What were you shooting for?
Well, our relationship with the automobile is really fundamentally changing.
This is an electric autonomous drive car with 26-inch wheels and windows coated with a special pattern to add privacy.
It feels open. That was the whole idea here?
Exactly. Yeah. Again, another way to think about that luxury in motion. Luxury is space. Luxury is comfort.
It also has touchscreen doors, so each person in the car can surf the web, email others, or look at what's around their car thanks to cameras offering 360-degree views.
And in this case, you can imagine I'm seeing what another person, another car up ahead is seeing. Oh, hey, I can talk to my friend and say, you gotta see this. And he can actually see it.
And you can see what's around your F-015 even when you're not with it.
So the app makes you to be connected to your car, to your autonomous car all the time. So for example, when you park the car and you want to know where it is, you click the 360-degree view and you can swipe through it and can always see where your car is parked, for example. Or when your car is driving to pick you up, you can see where the car right now is driving.
So you can always, in essence, you can watch your car at all times.
That's true, yes.
In the future, Mercedes is considering gesture controls and even more connectivity. Some of it will likely come through a touchscreen table that pops up between seats.
It's a lounge that I'm taking with me as opposed to leaving behind.
Phil LeBeau, Nightly Business Report, Valley of Fire, Nevada.
Did anyone just notice that car was driving on the wrong side of the road, on the left side of the
No,
road?
I didn't notice.
On the other side of the double line. I'm not sure I trust them yet.
I'm not sure I do
A lot of
either,
regulatory
but
hurdles yet to go on that.
yeah, it looks very cool, though.
It did look cool.
I don't know how many backpacks and,
Yeah.
things like that you can get
Cheetos.
in there. Yeah. That'll do it for Nightly Business Report for tonight. Thanks for joining us. I'm Sue Herrera.
And I'm Tyler Matheson. Thanks for me as well. Have a great evening, everybody. See you back here tomorrow.